Hey everyone, welcome back to the channel. If you are new here, please hit subscribe and tap like so you do not miss my deep dives into quantum stocks and big innovation plays. Today, we are going to talk about IonQ, ticker IonQ. If you are thinking about investing, this is everything you need to know. What IonQ does, what recent moves are changing its quantum game, the upside, the risks, and what to watch closely if you want to decide whether this stock has real long-term potential. IonQ is a quantum computing company based in Maryland. It uses trapped ion technology. That means it traps charged atoms and uses electromagnetic fields and lasers to control quantum bits. This approach can deliver long coherence times and lower error rates compared to some other qubit types. IonQ also offers quantum services through cloud platforms, software kits, and developer tools. Its mission is to bring quantum out of the lab and into commercial, industrial, scientific, and academic use cases such as chemistry, materials, optimization, logistics, and security. What has been changing lately for IonQ? One big shift is its acquisition strategy. IonQ announced a $1.075 billion acquisition of Oxford Ionics, a UK startup specializing in ion trap on a chip hardware. The deal is mostly stock and is designed to accelerate IonQ's roadmap toward more scalable and fault-tolerant quantum systems. IonQ has also acquired other companies like LightSync and Capella to strengthen its quantum networking and hardware interconnect capabilities. Another part of the shift is guidance and results. In the second quarter of 2025, IonQ beat the top end of its revenue guidance by about 15%. Revenue in that quarter was around $20.7 million. The company also raised its outlook. Full-year revenue is now expected in the $82 to $100 million range, up from earlier expectations. That suggests that demand or contracts are lining up better than before. IonQ also has a strong cash position. After closing equity offerings and acquisitions, it reported pro forma cash equivalents, and investments of about $1.6 billion. Patents are another part of the story. IonQ has more than 1,000 patents or patent applications covering quantum networking, improved gate operations, error mitigation, and photonic interconnects. This helps protect technology, makes it more defensible, and gives leverage if quantum becomes more commercially viable. IonQ is also working on quantum networking and quantum key distribution, projects designed to make quantum communication secure and scalable. Leadership and positioning are also shifting. IonQ's CEO Niccolo de Masi is also chairman now. The company has been hiring senior talent in quantum systems engineering, legal, and industry relations. It is pushing more into federal and government applications, cybersecurity, and secure communications. Government funding can underwrite long-term research, and quantum innovation has strong national security implications. Where is the upside if IonQ executes well? If everything goes according to plan, IonQ could become a leader in quantum computing hardware and networking. The Oxford Ionics acquisition could accelerate its path to developing fault-tolerant quantum computers. The company says it aims for 800 logical qubits by 2027 and 80,000 logical qubits by 2030. If it achieves that, it would be far ahead of many competitors. With strong intellectual property, cloud platform integrations, and advances in networking and secure communications, IonQ might open up new revenue streams. If users see real speed-ups and real value in drug discovery, materials science, and simulation, that could lift adoption and lead to larger contracts. Beating revenue guidance, showing consistent growth, and showing a path to narrowing losses will help build investor confidence. Its cash cushion gives it time to invest, buy, hire, and scale. Federal focus and government contracts can provide recurring revenues and possibly less volatile demand compared to purely speculative corporate customers. Those are positives. Now the risks. Quantum is still early and IonQ has big challenges ahead. Losses are large. The company is not profitable. Operating expenses, research and development, cost of acquisitions, maintaining quantum hardware and networking all cost a lot. If revenues do not ramp quickly enough, cash burn could become problematic. Dilution risk is real. Equity offerings to raise money reduce ownership for existing shareholders. Acquisitions bring integration risk. Combining hardware, software, intellectual property, teams, and management cultures takes time and resources. Competition is another risk. Quantum computing is attracting many players like IBM, Microsoft, Google, Rigetti, and Quantinuum. Some focus on different architectures. Some focus on other qubit technologies. Some are more software-oriented. If IonQ falls behind in qubit quality, error rates, coherence, or scalability, it could lose its lead. Hardware manufacturing is hard. Ion traps, photonic interconnects, error correction, and logical qubits are difficult to scale. Regulatory, policy, and supply chain risks also matter. Quantum networking and cryptography involve sensitive technology. Governments regulate them closely. Export controls, contracts, and policy changes can all impact IonQ. The supply chain for lasers, optical components, high-precision traps, and rare materials depends on specialized manufacturers. Disruptions could hurt progress or cost. There is also risk in expectations. Investors paying for growth often expect miracles. If IonQ promises 80,000 logical qubits by 2030 and misses, the price may suffer. If guidance does not match execution, or if the promised speed-ups do not translate into commercial usefulness, market sentiment could pivot. Quantum usefulness metrics are still developing. People want to see real advantage over classical computing. If IonQ's systems are still noisy, hard to use, or limited by classical overhead, customers might hesitate. Given all this, what would I personally watch? Revenue growth. Are they consistently beating or meeting guidance? Customer contract pipeline, especially new government or secure communications deals. How well they integrate Oxford Ionics and how that helps with chip-based ion traps. Are the error rates improving? Are logical qubits progress becoming real or just promised? Cash burn and cash balance. Any dilution or stock offerings? Their ability to hit roadmap milestones. Moves by competitors. Macro factors like government spending for technology, export controls, and legislation regarding AI and quantum. If you believe quantum computing will be transformative in the next decade, a small position in IonQ could make sense. But I would not go all in until there is proof of sustained revenue growth, margin improvements, and actual performance, not just announcements. This is a high-risk and high-reward situation. If it works, you could make good gains. If it fails or is delayed, losses are possible. Wrapping up, IonQ is one of the most fascinating quantum plays right now. With its recent acquisition of Oxford Ionics, its strong intellectual property portfolio, raised guidance, and government attention, it has momentum. But the road ahead is not easy. It is still early. Execution, cost control, and ability to scale hardware and networking will determine whether IonQ becomes a big winner or just another ambitious technology story. If you like this breakdown, please hit like, subscribe, and comment what you think. Is IonQ the quantum leader of the future, or are the expectations too high? Thanks for watching. Stay curious, stay informed, and always do your own research. And just to be clear, I am not a financial advisor, and nothing in this video is a recommendation to buy or sell any security. This is me sharing what I found to help you with your own decision.